are on the second video. I know it says step 1 there, but this is actually the second video in the series, and we're going to show step 1 and 2 on how to bulletproof your portfolio. Step 1 to do that is, first of all, learn to limit risk. Right now, as I mentioned in the first video, we have a number of stock positions protected by put options. It was 11 when you saw the video last, well, I think it was Monday, okay? But now we have 12 stock positions. The initial deposit, just to bring you up to speed, the initial deposit in May 12th of 2007 was $100,000. And to update you, today that account's value is $108,660.31. And again, what I said was remarkable on the last video about the account was not that it's up. What's remarkable is the fact that it could not possibly fall below $100,000 in value. We had a number of put options protecting our stock so that the stock, options, and cash that are all in that account could not possibly fall below the initial deposit. Now, I took it out of bulletproof status by just a little bit after yesterday's purchase of AMZN.com, and I'll be explaining why I did that and what it's about. Picked up Amazon yesterday at $86.50 a share. At the same time, I picked up a January 2009 $105 put option for $26.50, making a total investment of $113. Now, for those of you not familiar with stocks and options, the Amazon is 100 shares, so that's actually $8,650 invested, and the put option there controls 100 shares, and so it's actually an investment of $2,650. Okay? So the total investment is $113, but what's guaranteed to be returned is at least $105 because of that put option. It's like an insurance policy on the stock. Okay? So the difference, the risk, is $8, or times every 100 shares would be $800 at risk. Well, that $800 divided by the total invested amount of $11,300 is 7.07% risk. It's actually a little higher than I normally go. I try and keep my risk to between 3 and 5%, but the market is a little interesting here lately. So here's a review. 100 shares of Amazon at $86.50, a January 09 $105 put option at $26.50. The total invested is $113, but we're guaranteed back $105. So the total at risk is the difference of $8, or 7.07%. Now, some of my critics would seem to think that that stock has to move up above $105 a share before you make any money. That's not so. Also, they might believe that, gosh, that stock has to move before you could get anything back at all. They seem to think that the minute you buy a put option, you've lost a pile of cash. Maybe you've lost that 7.07%. Just like driving a car off the parking lot. It loses 20% of its value the moment that you leave, right? Well, nobody seems to really understand put options. I've been doing this for a number of years, and I'm going to show you an interesting phenomenon. Yesterday, again, I bought Amazon at $86.50. Now look down at the violet lettering, and you'll see that Amazon.com went up to $87.55. That's a gain, right? Well, what happens to a put option when you have a gain? The put option is supposed to go down, right? But take a look. This is today's pricing on the January 09 $105 put. It's $27.25. That's a gain also. Interesting. See, I got in yesterday at $113. I could get out today at $114.80, and I've never had more than 7% of my account at risk. Actually, not the account, just that investment. Now, what's interesting here is to understand that Amazon's recent price action has increased its volatility, and because it has higher volatility, that gets priced into the put. I'm making money while I'm making money? Well, step 2, leg in, starting out small. You know, you've heard that adage, don't put all of your eggs in one basket. I don't know if I necessarily agree completely with that. I would just say watch those eggs as you put them in the basket, and watch the basket too. Amazon, adding Amazon to the R3 account added to the risk, didn't it? It added to the risk by the tune of $800. But the total invested, the total invested here of $800 versus the $11,300 that went into the trade is only 7.07%. But if you look at it as a percentage of the entire account, well, how about that? It's less than 0.75% of the account at risk. So I did say that the R3 account is a little out of bulletproof status. This is how much it's out of bulletproof status by. I'm not too concerned. Now, if you'll take a look here, the next 3 videos, we're going to be talking about the income methods. We're going to talk about how to spread the net to catch winners, and we're going to talk about how to replace losers. And I want to encourage everybody again to get a free subscription to the R3 blog at www.radioactivetrading.com. You can see all of my setups and all of my closes on all of my trades, and including income method number 1. Income methods 2 through 6 are privileged. We give those to Fission subscribers only. Free webinars are available every Tuesday and Friday. If you'll go on the site, www.radioactivetrading.com, you'll see where to sign up for those. And of course, you can always take advantage of the free YouTube videos, the Holy Grail of Trading series, the Trouble with Covered Call series, How to Bulletproof Your Portfolio series, which is right now in production. Subscribe to the Freedom School channel for frequent updates. And if you have any questions, I'm available at Kurt, K-U-R-T, at radioactivetrading.com. Okay, we'll see you in that next video. Bye for now and happy trading.